Okay, we are going to cover return on investment, otherwise known as ROI. So define and justify return on investment, ROI, for supplier diversity programs to appropriate stakeholders. So what is return on investment? The ISM glossary defines it as the ratio of annual operating income to the total capital invested. In its simplest form, the ratio that compares the gain or loss from an investment relative to its cost. So here's some formulas. Net return on investment divided by the cost of the investment times 100%. And FVI, final value of investment minus the initial value of the investment, will give you the return divided by the cost of the investment. Focus on how supply management must carefully consider the way the supplier diversity programs will be measured so that management understands the costs and benefits. And justifying a supplier diversity program often will require showing a positive ROI. So how do you get there from here? Economic development and impact. So according to the Department of Commerce study, the minority population will be responsible for 70% of the total increase in purchasing power from 2000 to 2045. So over the next 20 years. A joint report from the Milken Institute and the Minority Business Development Agency suggests the number of minority business owners in the U.S. is growing at a rate of 17% annually. Overall, minority business enterprises' sales are growing at 34% a year, twice as fast as the national average. The American economy in the 21st century will transition to a more diverse demographic majority. So fewer older white guys. So economic impact analysis provides a quantitative method to estimate the economic benefits that a project or industry brings to the surrounding communities where the specific project is located. So typically, economic impact studies use financial and economic data to generate estimates of the output. So GDP, employment, and tax revenues associated with the project, that kind of thing. In general, economic impacts can be estimated at the direct, indirect, and induced levels. So we got direct impact, we got an indirect impact, and we got something called an induced impact, equals the total economic impact. So construction order results in a direct general contractor impact for making money. Indirect is the plumbing subcontractor. And induced is employees at the general contractor and plumbing contractor spending money in the area. So direct, indirect, and induced impacts. So understanding the economic impact, construction order for $50 million. The general contractor is going to get that $50 million to build a new hospital. The plumbing subcontractor is going to get $2 million of that from the general contractor to plumb the new hospital, which is indirect. And then the induced is going to be $5 million in labor for the 50 employees of the general contractor and all the subcontractors. Government is going to collect $6 million as tax on construction, and the profits at the general contractor and the subcontractors for a year equal $1.5 million for this project. So one order of $50 million for construction. Economic impact is $50 million plus 2 plus, that's 52 for the economic impact. Then you got $5 million in earnings. You get value add of 1.5 million, or 5 plus 6 plus 1.5 to 12.5 million. So 5 million earnings. I'm not sure where the 6 million comes from, but 1.5 million in profit. So economic impact on the primary and intermediate industries in the region, earnings, employment, new employment generated, value add. So that is understanding economic impact. Measuring it's another thing. Reputational risk. So reputational risk is a threat or danger to the name or standing of a business. So a reputational risk can occur in the following ways: directly as a result of the actions of the company itself, indirectly due to the actions of an employee or employees, and tangentially through the peripheral parties such as suppliers. So according to a study by the World Economic Forum, more than 25% of the company's market value is directly attributable to its reputation. 87% of executives rate reputation risk is more important than strategic risks. And 41% of companies experience a negative reputation event reported the loss of brand value and revenue. So this is particular, the companies that are particularly sensitive to this are the consumer products and consumer services companies, because their customers can easily vote with their feet. Whereas a company like PACCAR, who sells to trucking companies, is not as affected by reputation risk. It is somewhat if it's a safety risk. An organization must be aware of its reputation on diversity and inclusion. This is particularly true for services industries. Consumer services or consumer products. Key for basis for how stakeholders will judge an organization. Here are some questions supplier diversity professionals should actively address to minimize risks and capitalize on benefits. How is the company program perceived by its diverse talent, the diverse supplier community, consumers, and investors? What risks and opportunities do these perceptions open? What is the firm's strategy for addressing these risks and opportunities? How does supplier diversity and inclusion fit into the wider push to improve transparency and trust? And how is progress measured and communicated? Regulatory and legal compliance, so monitoring system monitor, document, and report adherence to the supplier diversity program. Need something like that. And the key elements would include performance, included as a dimension in employee and supplier performance appraisals, evaluation, follow up on training and evaluations to ensure information is being retained, and audit, establish and maintain procedures to audit both internal and external diversity programs. Audit should be used for learning and enhancing performance. For example, a large contract with a supplier may include a requirement to subcontract with a diverse supplier for a certain percentage of the contract's value. Diverse supplier programs need visible metrics on actual to goal. So determine what categories and levels of diverse supplier participation in the organization is attained. And accountability, look internally on how well the organization identifies and uses diverse suppliers. And look externally on how well the diverse suppliers are while performing in comparison to non-diverse white boy suppliers. You got to compare the two. So some metrics include percentage of contracts spend with minority-owned businesses, number of subcontracts or second-tier spend over a given time. Government set-asides have been challenged in court, but aspirational goals or targets are still widely used by the government for diverse businesses. This usually requires large prime contractors, tier 1 suppliers, to meet targets with diverse businesses, tier 2 or tier 3 suppliers. And leadership in supplier diversity initiatives. Senior management now recognizes the value of diverse suppliers with an increasing diverse customer base. And developing a supplier diversity program demonstrates an organization's awareness of local demographics. So this is why consumer products and consumer services businesses are so sensitive to supplier diversity issues, because their customer base is very diverse. Benchmarking. So definitions. So benchmark, a standard or point of reference used to measure a company. And benchmarking is a practice where the results of one organization are compared to another organization to establish targets or goals. Best practice, as opposed to benchmarking, best practice is a leading edge activity that is innovative and successfully implemented. One of the tools to use in building a business case for a diversity program is to benchmark the organization's efforts. So benchmarking is the process by which selected practices and results of one organization are compared to those of another. and to establish targets for improvement. So benchmarking can be performed by identifying a world-class organization and studying them by a comparison, if they'll let you. It is closely associated with metrics and numbers to see how your organizations measure up. Need to look at a broader context for benchmarking. Is supply management contributing to the organization's overall strategy? Supply management should benchmark strategic objectives to help the organization stay focused on corporate goals. Also, to demonstrate that supplier diversity is an integral part of the overall organization. So, potential diverse supplier measurements. Percentage of purchasing spend with diverse suppliers, number of years programs been established, tier 2, impact on the local community, senior leadership involvement, increase in internal customer satisfaction, etc. Brand enhancement. According to Hootology's Supplier Diversity Impact Indicator, consumers who perceive a brand as committed to diversity are nearly 4 times more likely to consider a brand's products or services compared to a company who they perceive are not committed to diversity. Hootology's Supplier Diversity Impact Indicator. You can read all about it here. Those who perceive a brand as committed to diversity are 3 times more likely to purchase a brand's products and services than those perceived are not committed to diversity. And again, this is very true when your customer base is the consumer. A 1% lift in awareness of company supplier diversity program will lead to additional 600,000 U.S. consumers using the company's products or services. Revenue enablement. Supplier diversity is not often thought of as a revenue enabler, although since it is generally thought of as only an expense in accounting terms, that's what purchasing generally is thought of. New research shows that world-class procurement organizations that focus heavily on supplier diversity generate 133% greater return on their cost of procurement. And a study done by the Hackett Group reported that companies with supplier diversity program derive an additional $3.6 million to their company's bottom line for every million in procurement operation costs. Validated savings, cost savings analysis. Spend analysis looks at historical data, while cost savings analysis looks at savings potential. Common tracking method for project savings is the sourcing prioritization chart as seen on the next slide. And savings must always be tracked from a total cost perspective, not just unit price. The largest savings dollars may come from the hardest to implement projects, so they may be prioritized lower. Also be aware of hidden costs, such as lengthening the supply line, premium air freight, higher obsolescent costs, more inventory in the pipeline, etc. Switching costs to new suppliers, reworking tooling to fit, or designed to be manufactured in a new process. Tooling always seems to cost money when you move it. So here's your sourcing prioritization chart. Vertical axis, we've got savings potential, how much, basically in dollars. And then horizontal axis is how easy is it going to be to implement. So, you want all of these here. High savings dollars, very easy to implement. You want to stay away from these. These are a waste of time. Low savings potential, but very difficult to implement. Customer satisfaction. According to 2019 Hackett Group's study on supplier diversity, 28% of companies measure the value of their supplier diversity programs through increases in internal customer satisfaction. It's critically important for the procurement to fully support the supplier diversity program by 1, driving accountability, 2, instituting appropriate policies, and 3, providing the right level of funding. A well-positioned second-tier program and a well-articulated diverse supplier subcontracting plan will be key in meeting customer requirements. Community goodwill. Consider partnering with diverse communities to foster goodwill and increase awareness of the organization's commitment to diversity. This showcases the organization's commitment to serve the communities in which it does business in. For example, Henry Ford Health System supplier diversity is aligned with the organization's strategic objectives and includes annual targeted spend goals. Supplier diversity is nested within the organization's community pillar because its patients come from diverse communities, its employees live and work in diverse communities, and its suppliers are based or hired from diverse communities. Investor impact. 92% of the world's largest 250 companies are producing corporate social responsibility reports, informing shareholders and the public about their activities. Investors are increasingly asking a new question, whether a company has the strategic vision and capabilities to achieve strong, diverse supplier inclusion strategies. That means companies must start measuring and reporting the results of their initiatives. Instead of communicating policies for improving diversity, they must communicate outcome metrics such as the number of diverse suppliers being utilized, percentage of diverse spend against total spend, and diverse individuals promoted internally to management positions, things like that. Moving from intention to results is the next evolution that investors are looking for. The only way to outperform this in this new era will be for companies to make supplier diversity issues central to their strategy and operations, then to measure and communicate their superior performance. Global society faces enormous challenges, but if companies are bold and strategic with their supplier diversity and inclusion activities, they will be rewarded. So under our current president, Trump, these things are not very popular, but he's only going to be in office for 4 years. If you look down the line, you're going to need this stuff. The supply management professional will routinely define and justify the financial return on investment for supplier diversity programs. What is the best explanation of a return on investment? The ratio of annual costs compared to an annual profit. Could be ratio of annual operating income to the total capital invested in the business. Better. Annual rate of profit minus overhead costs. No. Rate of interest received on investment. Nope. I would go with B, I think. Could be A or B, but I'd go with B. B it is. All right. Where is the best place to look for cost savings opportunities when working with suppliers? Look for operational improvements that result from optimizing your ordering practices. Yeah, maybe. Encourage your suppliers to invest in better processes and technologies that reduce labor inputs and increase production. Yeah, better answer. Invite your suppliers' operations and engineering staff to tour your facilities to see if you are currently, how your current process is the product you may buy from them. Okay. Ask your suppliers for a copy of their spend data with your company. So you're looking for the best place to look for cost savings opportunities. I would go with C. Bring the guys in and show them what you're doing with their product. They might come up with some ideas for you. C it is. Yeah. Okay, summary. Return on investment as the ratio of annual operating income to the total capital invested in the business. According to a Department of Commerce study, the minority population are responsible for 70% of the total increase in purchasing power over the next 20 years from the previous 25. Overall, minority business enterprise sales are growing at 34% a year, twice as fast as the national average. And reputation, according to a study by the World Economic Forum, more than 25% of a company's market value is directly attributable to its reputation. An organization must be aware of its reputation on diversity and inclusion, as this is a key basis for how stakeholders judge an organization. One useful tool for a buyer building a business case for a supplier diversity program is benchmarking. Benchmarking is a process by which selected practices and results of one organization are compared to those of one or more other organizations to establish targets for improvement. And consumers who perceive a brand is committed to diversity are nearly 4 times more likely to consider a brand's products or services compared to those who do not. 28% of companies measure the value of their supplier diversity programs through increases in internal customer satisfaction for spend categories where diverse suppliers were used. References. All right. Let's go grab some questions here. All right. We only got 7 of them. All right, go ahead and start doing them. We'll go over answers shortly. All right, 5 only has 3 answers. Okay. Some answers here. Okay, number 1 is alpha. 2 is Bravo. 3 is also Bravo. 4 is Alpha. 5 is Charlie. And 6 is Bravo. Here's how the math all works out. And 7 is Bravo. All right. Now we will tackle I2.